Good morning, good evening, good afternoon, depending where you are on the planet, and welcome to the Thursday, the 14th of April, Bull versus Bear webinar for Trade Day. Steve Miley on the call here. Welcome, everyone. We're going to go through our usual, normal, regular run through in here today. Calendar, what we've had, what we've got coming up, both the macroeconomic calendars we see here, plus also the earnings calendar, what's going on in the earnings world, what we're expecting from earnings. We'll also take a look at the some articles. I'll just run through the headlines from the major news wires in here, from Bloomberg, Reuters, Forex Live. What are the main geopolitical, macroeconomic, fundamental events that are dictating the price action in markets going into today, and what we should be aware of, and also then to take a look at some charts and what's going on the charts, where we could potentially see some opportunities for today. Let's take a look first of all at the calendar. Fairly light this morning. The main thing to know, actually, I'll come back to it in a second, is the Bank of Canada, Bank of Korea in here. But first of all, let's talk about the ECB. So we've got the ECB, the European Central Bank, coming up in 15 minutes. They're going to release, when we're on the call in here, their rate decision. Now, we're not expecting any change in rates in here, but what we might see in the policy statement is indication on reduction in the balance sheet. So where do we have it here? European says up ahead of ECB meeting. There is an expectation in here for them to possibly maintaining a flexible policy in here, but also potentially some announcement on reduction in the balance sheet. So we're definitely going to be keeping an eye out for that. You should get something from that in the statement, but more details likely in the press conference, which is just under an hour's time. So if you're on Eastern time, that's going to be at 8:30 Eastern time. If you're in the UK, it's at 1:30. If you're on European Central mainland time in here, European Central time, 2:30 in the afternoon. So ECB principles are going to be a big focus. At the same time as that release, we also get probably the main focus for the US investor, which is the retail sales. But nevertheless, don't forget, this ECB decision could be significant. Okay, if the ECB step to more hawkish, that's going to have a significant impact, because then you've got not necessarily the world's most dovish central bank, probably Bank of Japan still sits in that position, but the ECB certainly just sitting behind the Bank of Japan. And shifting, if they shift to a more hawkish tone, it's going to be significant. So it'll be interesting to see what they have to say. Moving through to the late part of the day, we do have Mester and Harker speaking from the Fed as well. And we do get Michigan consumer expectations, Michigan consumer sentiment. Now, these used to have some bigger impact on markets. They don't usually have too big an impact these days. And nevertheless, watching out for those. They are at 10 a.m. Today Eastern time. Okay, so the focus really though on the ECB, what they're going to be doing, and also on those retail sales data coming out, both of those coming out in an hour, although we do, as I say, now in just about 12-13 minutes we get the ECB policy statement, so we may get something whilst we're online, so we'll take a look at that whilst we're online, if I get a chance, if I remember, that is. Let's take a look at earnings as well. So going into today, earnings reports in here, mostly better than expected, but one of the headlines in here, Wells Fargo was a miss, and I'm not quite sure where I've got an article on that as we run through the articles. But Wells Fargo, a notable miss actually, by 20+%. I saw on, I don't know if they've picked it up in here already. No, we'll come back to it. Where are we? Wells Fargo. So there's the South Korea steps up inflation fight with surprise rate hike. So normally more of a kind of a more tempered, and they don't actually have a governor at the South Korea Central Bank, but they did unexpectedly surprise rate hike of 50 basis points in here. 25 basis points in here. So unexpected in here, and the citing higher inflation as the reason for that. So that's something just to keep. This is a global phenomenon now in here. Let me quickly find the thing on Wells Fargo. So just while I was talking about ECB, though, fearing high inflation, ECB to stay on course to unwind stimulus. This is what I'm talking about. Optionality and flexibility, high inflation, the key worry though, and schedule for stimulus rollback possible. So as more of a schedule, that's what we're really watching out for, a schedule for a potential for a stimulus rollback in here. So we'll be watching out for that. I say that's coming in. We'll get that first of all, the actual decision in 10 minutes time. Okay. A clearer schedule for unwinding as extraordinary stimulus. So remember, we're in extraordinary stimulus from COVID, actually, from in the pandemic. So obviously high inflation, out trumping concerns about war-related recession. So we're definitely going to be watching for that. There's Wells Fargo. So Wells Fargo profits beats as a lower cost blunt hit from weakening mortgage lending, but there was a big negative. Well, Wells Fargo's first dropped. First quarter profits dropped 21%, but beat Wall Street expectations Thursday. Okay, so even though they were down 21%, they did actually beat Wall Street expectations, but it's still significantly lower. So that is a bit of a concern. And we did have a slight miss on the revenue in here. But generally, you've got a sea of green in here. And if we go back to yesterday, and we looked at these yesterday anyway. JP Morgan did have a slight miss on EPS, and BlackRock a slight miss on revenue, but generally mostly positive in here as well from yesterday. So kicking off earnings season thus far on a fairly positive footing overall. Let's run through what they've got on Bloomberg's 5 things to start your day. Most of it's probably covered already in here. European Union has warned members that demand that unfriendly countries effectively pay for Russia's gas in rubles would violate sanctions. Not likely to be happening, so we're going to see what happens there. European Central Bank likely remains faster withdrawal of stimulus. We've discussed that already, so we're watching out for that. Musk is now, having declined a place on the board, has now launched a $43 billion hostile takeover of Twitter. Okay. From one extreme to another in here, shares are up in pre-trading, pre-market, significantly higher. I think I saw earlier on like 20% up in pre-market, but willing to pay $54.20 a share, representing a 54% premium over the January 28th closing price. So we're seeing, he said it's his best and final offer that he can unlock the company's extraordinary potential. So Musk, and so that's obviously helping broadly helping stock indices, tech sector today, and stocks in here are fairly quiet though overall. And remember, we've got a holiday shortened week. I need to mention that as well. So we've got it on the main site. Remember, tomorrow is a holiday. Don't try trading tomorrow. You shouldn't be able to trade. Markets are pretty much, as far as I can see, the markets what you have available to you are all closed. But if there's any kind of post-market tomorrow, don't be opening positions that you can't close out of. You'll end up breaking rules. Okay, so guys, please do. Once you close out at the end of the day, don't be tempted to come back in and trade in, post-market, or if there's a pre-market, or if there is anything open tomorrow. I don't know. There might be some markets that have got a vaguely open in here. Maybe some of the FX markets. Just be really careful. I mean, my suggestion would be, it's a holiday. Enjoy the holiday, right? Do some reading, do some research if but don't step in and trade. Don't get caught out by trading and not be able to get out of a position and then end up breaking a rule. That's one thing to say. The other thing is we also have a holiday. I know in the US, you guys in the US back in, and it's back to normal on Monday. The Easter weekend in Europe and the UK actually runs through Monday as well. So it's a holiday in Europe and UK on Monday. So probably less liquidity generally, even in the US, on the US side. On Monday, given that Europe and UK are going to be closed, and obviously the markets here are closed as well. So so just watch out for that as well. European UK markets all closed on Monday, so there will be no webinar on Friday tomorrow. There will be though a webinar on Monday, given the US markets are open. Okay, so we will be covering the webinar on Monday. Right, what else do we have in here? I want to run through stocks, bonds mixed amid rate hike bets, earnings. Okay. ECB meeting, corporate results in focus as tech shares rally. Tech shares rallying, obviously being helped high by Twitter, and the follow through from yesterday's really strong day. So if I come in here, let me just close some of these down. I'll come back to those in a second. So yesterday, this is a recap from yesterday. Wall Street surges in growth stocks rally. Earnings season open. So earnings obviously was slightly better than expected, as I mentioned. I think this is something I've been mentioning for days now, and you're waiting for this turn. And we got the turn 3 days ago in here. Back on Tuesday, we got this bullish outside day. This is the Treasury bonds, by the way. Jump to the charts, the Treasury bonds, and this is part of the driving force. Okay, this is part of the driver as to why we are seeing equities are allowed to rebound, because with all the higher yield pressures that we've had in here from all the higher yield higher yield pressures we've had, lower prices. Remember, we've been seeing this lower prices, higher yields. Okay, and you can see in here the market back on Tuesday reversed this. It was a bullish outside day, a key reversal day. Often this is called. Okay, outside pattern in here. It's not an engulfing pattern because the body here doesn't engulf, but it's nearly an engulfing pattern. Nevertheless, that's a bullish outside day. Would definitely be seen as a positive candlestick, and it pierces then this downtrend line, and then we push above it again yesterday, and then pushing higher again in here today. This, remember, higher in price, lower in yields. Higher in price, lower in yields. For you, this is the US 10-year note, and then that has allowed then stocks to move higher, and we'll come to look at the stocks. But if we just look at where we are in stocks, we had a decent rally yesterday, and as it said in the article in here, so Wall Street surges in growth stock rally. Growth stocks leading the way. We've discussed this before. Why growth stocks leading the way? We've had growth stocks higher because they are more sensitive. Growth stocks, which is mostly a lot of the tech sector, the Nasdaq leading the way back higher because the growth stocks, the tech sector, and the Nasdaq are more sensitive to interest rates. Okay, so higher yields, higher long-term interest rates have been very negative, and they've led the way down over the past week or two in here, and then we've seen them lead the way back higher yesterday. So the Nasdaq up just over 2% yesterday, pulling the Dow and S&P with it, both up just over 1% in here. JP Morgan down after profits fall 42%. We mentioned even though the miss there yesterday, but we had a strong outlook from Delta yesterday, from Delta Airlines. So that's what happened yesterday. Overnight kind of things are mixed in here, but as was just said in this, bonds are pushing higher again, back up towards yesterday's highs, and that should be positive going into today. And if we look at what's happened in here on the US side this morning, so we these were actually up a bit more than this in here, so we're basically unchanged here on the day. If you look across the board, the Dow is slightly up on futures, as long with the Nasdaq. The S&P is pretty much unchanged. These were a little higher, at one point Nasdaq was up like 0.4, 0.5% in here today. And if we look at the European futures, where are we? European futures in here. Whoops, wrong tab. I'll get there in a second, guys. So you see in here across the board higher, but remember, these were playing catch up to an extent. Some of these are playing catch up. The fact that we did have a lot of the or some of the rally that we saw in US stocks were after the European stock indices had closed, so they're playing catch up. So some of these gains are coming from the fact that these markets closed earlier, and the US continued higher after the European markets closed. See, the FTSE is a bit of a laggard today. FTSE, the UK index, pretty much unchanged, and they sort of mentioned that in here. Where are we? So FTSE 100, we've got strength in the pound. The pound has rebounded, so FTSE 100 slips a stronger pound than energy stocks way. So energy stocks lower, but the pound, remember in here, if you do look at European stocks, if you see strength in the currency, if you see strength in the pound versus the dollar, or pound versus the euro, or the euro versus the dollar, you see then a stronger pound, a stronger euro is negative for then the companies within that economy. Okay, it's deemed as negative as companies within that economy, and particularly companies like in the FTSE, where a lot of those companies earn on their revenues from overseas, okay, because then in pound terms they're actually earning less pounds if the pound is stronger. So a strengthening currency is often negative, seen as negative to an extent for the currency, and we've seen the pound leap higher against the dollar over the last 24 hours, and that's kind of weighing on the FTSE. So some underperformance from the FTSE, just a little bit of education there of how forex can impact into the forex markets, impacting into the indices. Futures edge higher ahead of bank earnings. Twitter jumps on Musk takeover. No surprises there. We've covered all of these. Let me just close them down as I go through, so I know what I've looked at. Wells Fargo, we've talked about. Beat profits, so they just beat kind of estimates, but obviously we said there. The numbers kind of mixed, but then way down on previously. European shares edge up ahead of the ECB, which we've got coming up literally in a minute. And then we also have in here, what do we have? Morning bid, I've covered that. Central banks flying into storm clouds. Musk again in here, article about Musk. It's not loading, but instant view. Elon Musk offers to buy Twitter for 41 billion, and Forex live in here. Musk bids for Euro ECB coming up. And next, shares jumped 13%, Twitter in pre-market. FOMC checker, the Fed tool, 91% nailed on pretty much now for the next meeting to be 50 basis points. If we look in here, growing risk now, only an 8% chance that the one after that is going to be. So look, if we look in here, this is then another another 25. So in here, we're going, the current rate is 25 to 50. So 75 to 100 at the next meeting, the 4th of May meeting. And then if we skip ahead to the 15th of June meeting in here, okay, so then that's 100 to 125. So this in here is a total of 75 up. So 50 plus 25 this would be. So in here, they're nailing on almost certainly. You've got now these two added together is going to be around 92%. 92% chance we're going to get back-to-back half a point, 50 basis point, 0.5% increases going into the June meeting. So 250s, May 4th of May and 15th of June. So we've already looked at that. We looked at the bonds reversing. Let's take a look at the S&P in here. So a decent rebound yesterday, but you see an inside pattern. Again, coming in here, we talked about this 50% retracement, held initially at the 38.2% retracement of the whole mid-March through late March rally. Okay, we held first at the 38.2, surrendered that, and now have held at the 50%. Just pierced that back on Tuesday, and then rebounded right off of it on Wednesday. But an inside pattern, yeah. Yesterday's price action contained inside the previous day's activity in here. And you can see we did poke higher this morning, and we've dipped back lower in here. But certainly looking for upside there on the S&P. And if I could swing onto the, this is going to be critical in here. So you've got like a mini double bottom. So think about this low here and this low here. We've pushed above this high here. Okay, so you've got this mini double bottom going on, and this is on the 1 hour chart now. This is going to be critical. The peak from 2 days ago, okay, that peaks up at 44.6675. Now, if you look at my my report from today, I'm still saying, well, this is negative. Yeah, we closed out here. It's still negative whilst below here. But given that we've held up here going into today, I'm more thinking this is going to be positive. But we're kind of jury's out in here at the moment. The market wants to make a decision in here. So maybe a push above for here. This is going to be the critical trigger. Get through here. Then you have a triple bottom goes in. Okay. And that can really open up upside. Remember, going into the long weekend as well, the market might want to position itself. So you could see a more aggressive move today. So watching out for that. Okay. You could also see, who wants to be long with a war going on and super aggressively hawkish central banks into play. There's also a lot of articles been written more recently. I think I mentioned this yesterday about, have we reached peak hawkishness? I think we probably have. The hawks are all out there really hawkish. The doves have moved to more hawkish. Who's going to become even more hawkish on the central bank side? We've got the Bank of Korea in here, hiking rates in here unexpectedly. So we've got, we just had the RBNZ and the Bank of Canada both raised interest rates this week. We've got to the point of hawkishness now. The markets are very much priced in the hawkishness. So maybe we'll get a little bit of a pullback from that. So that's on the S&P 500. So I'm, even though my report said whilst below here, kind of negative, we're sitting right up now. I think there's real risk we go and punch up to this level. Maybe even going through the US equity market opening here. Remember, we've got that data in here this morning. Not forgetting retail sales. So that could be a driver in here this morning, as well as the ECB, which we've just had. Now, what do we have on ECB? Let me see if I can go. I was going to go to our own feed, but if I go to Twitter in here, and let me see if I can go and take a look at what we've got from. I'm going to go to our friends at LiveSquawk in here. That's fine. Go to our friends at LiveSquawk. There we are, LiveSquawk. Here we go. So ECB leaves May policy rates on hold. Expected refund takes unchanged. Yeah, we know all of that, so no surprise there. Did they actually announce anything? So no, probably. I don't think we've seen any announcement in here. So okay, it doesn't say in here. So I've got nothing coming through. So maybe we don't get anything right here, right now. We don't get anything at the moment coming through on the actual policy changes with regard to potential. So we probably won't get that now to the Q&A. Doesn't look like there's anything in the statement in here, not that I'm getting from there anyway. So let me just have a quick look in here on ECB. That's where we were natural go to ECB meeting. We'll just narrow it down to any time in the past hour, anything. Euro little trades, this is a weight, that's no good. Euro is up ahead of, no, that's no good. Okay, so all of ahead of there, nothing breaking. Okay, so let me see if we get anything from CNBC on Twitter. I'm just going to run through these in here. Oh no, that's not what I wanted to look at in here. Anything coming through? ECB interest rate actual? No, we know that. No, nothing coming through in here. No. Okay, rising energy and commodity prices are decreasing demand and slowing production. Okay, so ECB. So let me see if here from what we got from financial juice. ECB will take whatever steps are necessary to carry out its mandate of pursuing price stability and contribute. So this sounds to be a little bit more hawkish. ECB in current conditions of high uncertainty, the ECB will maintain optionality. So they have been talking about this flexibility, gradualism, okay, but also it seems to be pointing to whatever steps are necessary to carry out its mandate of pursuing price stability. Well, obviously inflation is starting to really get out of hand. The ECB does the incoming data since its last meeting reinforces that net asset purchase under app should be concluded in the third quarter. So they're reinforcing, what. So kind of a step slightly to more hawkish, I would say, from that so far. Okay, let's have a look. Actually, I don't actually have this saved, but let's see if it's had an impact. I'm going to jump off this chart, and we'll come back to the Nasdaq in a second, but just see if it's had an impact on. I don't really look at the euro in here, but maybe we've got the euro, euro FX in here. No, it's very spotty. Doesn't really trade that much by the looks of it in here. That's no good. Let me get rid of that one. See if it's had an impact because the dollar is mostly made up of euro. So down in here. So dollar down in here. So that would imply to me that, and if I step into maybe a shorter term chart, 5-minute chart. Yeah, we're down. So dollar down means euro up, okay? Because a lot of the dollar index, remember, is made up of euro. So euro is up, so that's that more hawkish tone. So a slight bid to the euro on the back of that, okay? So I'm just looking at offline here, another screen you can't see in the euro yet has pushed higher. Okay, let's have a look. Going back to where we were on the charts, ones that you're probably more interested in. So I'll go back to the other tab and we'll finish off on the stocks with the Nasdaq. So here's the Nasdaq on the daily. So in here, again, it's an inside pattern. Remember, we held here against, look, we actually held 23.6% retracement. Then we held at the 38.2% retracement. Kind of went straight through the 50%, but we've held just above the 61.8% retracement. Another inside pattern, but a much more aggressive one, really coming back up. Yesterday on Wednesday, nearly back up to the Tuesday high in here. And we got very close to the Tuesday high, maybe even pipped above it there. When we zoom in, we'll see that. And we've come back to pretty much be sitting unchanged here on the day. Let's zoom in because that Tuesday high is going to be important for that whole double bottom scenario. And here we are. So we did just pip above that. So we already got the double bottom on these two, this low here through here. With yesterday's rally, and then overnight we're pushed higher and we just got above this peak in here. This peak from Tuesday, that high is 14,284 and a quarter. We've been up to 14,296 and a quarter. So we did pip above there, okay, but obviously in pre-market trading, if we can get back above here, I think, and once the actual cash market opens, then we got triple bottom, and then this could then easily lead the S&P 500, as we discussed there, to also putting in its triple bottom up through here. So yeah, I mean, that's going to be critical in here today. So really now, I think jury's out until the cash market opens. If we get back above this peak in here, then this looks really bullish, and I would go with that one. If it starts to get back low, I'd say these lows here. You see, we've got these lows, these little swing lows in here from overnight, from post. This is after the market closed last night in here, I think. Yeah, or from late trading yesterday. So lows here, 14,130 from 14,130 to 150 to 14,125. If it goes down through these lows, it starts to look negative again. So keeping an eye on those levels, guys. Let me have a quick look. We'll have a quick nod to the commodities, and then I'll wrap us up. I'll start off in here with oil. So oil continues its push higher. Yesterday, we had a slight dip, look, respecting this downtrend line. But for me, maybe the dip's a buy opportunity in here. And if we go to the 30-minute chart, see the market just drifted slightly lower. I wouldn't be surprised to see this swing back higher in here. We have broken, I think, in here, if I put the trend line on. Where has my, here we go. So this one in here, we've kind of just breached. That's a really good trend line as well, because you see draw it off of here, through all these lows here, It comes close and moves away, comes, spikes lower and holds, breaks. But look, the important thing in here, just because it breaks, it doesn't mean that then it's going lower. It breaks, rejects, comes back lower, and then rebounds. But actually held above. You've got lower lows and lower highs. Okay, it's a 1 hour, 30-minute chart. Sorry, but we're holding above this low. It's broken this. Remember, in kind of out of hours. Yeah, in non-US hours. So if we can hold now sideways, there is risk for the upside in oil. So I would say bullish here or staying bullish on oil. Let's take a look at gold. In here, strong close yesterday, dip and a rebound in here, back up towards yesterday's highs already today. And if you go into, I've got 15 minutes in here, but I'm going to step back to 30-minute, and you can see in here, dip, back up to a new high, dip, and then a really strong rebound. Look, the last hour and a half in here, really impulsive rebound. Could have created a topping pattern in here, came down towards these lows here and here. If it had broken below these lows here and here, it would have been more of a topping pattern, but we get down close to them here. Look, just holding above this low here. That low was 1969.2. We hold there just above it at 1970.5. So hold by just about less than $1, and then impulsively move back high in the last 30 minutes. So if you think you got like this little kind of counter trend, kind of topping line comes across here, sort of thing. We're back above that counter trend line. I think that's a buy signal. So this underlying trend stays intact. I think, I'd be back in long now and looking for this to charge higher again going into today. All right, guys, I'm going to wrap us there. Have a great Easter weekend. Please don't trade tomorrow. Don't even try to trade tomorrow, please. So then you won't get stopped out. You won't get a problem, or you won't get a problem with you breaking a rule if you're on the challenge. And take a date. If you want to keep your head in markets and keep them in markets, then fine. Go do some research. Go read up and something. Do some prep for next week. Okay, go and look at where opportunities might lie for next week, for Sunday night, Monday. Okay, Sunday evening, Monday. But don't try and trade, please. Monday, remember, no webinar tomorrow. Markets are closed, and then Monday we have US open, UK, Europe closed, but there will be a webinar, and I'll likely be myself back with you on Monday. We might end up cancelling. It's a UK holiday year, but I'll try and do the webinar anyway. Depending on what happens, though, we might end up cancelling that webinar, but hopefully it'll still be on Monday. I'm going to wish you all a great Easter weekend. Enjoy the time if you do see your family, and I'll be back with you with another. Bull versus Bear webinar Monday, probably. All right, take care, guys. Bye.